Welcome back, Owen, with me here on set. We're going to start in France, actually, because the jobs of thousands of Peugeot Citroën staff are going to be decided very soon, aren't they?
Stuart, more or less as we're speaking, unions and management of Peugeot Citroën will be talking, sitting down at head office and discussing the future of a company that is one of France's best-known brands, but for a long time now has been languishing in the doldrums. Sales steeply down, its market share down, and crucially, its share price bottoming out as it loses out to rivals who've got a bigger presence on the international stage, like Renault. As you say, at stake, the future of up to 10,000 jobs, perhaps a few less than that in the immediate term, but nevertheless a concern for a company that is struggling to find its way in a world where most manufacturers now realise the only way forward is to merge.
Peugeot and Citroën bosses want to cut costs and raise cash. How they'll do that will soon be revealed. The French car maker is set to outline restructuring plans to the employees' unions on Thursday. Most are expecting job cuts.
In Peugeot's vocabulary, the words closure and layoffs are taboo. So they're going to talk about conversions, converting the Aulnay factory, and external mobility to speak about layoffs.
PSA could announce up to 10,000 job losses across France. Its Aulnay-sous-Bois plant near Paris may shut down entirely. They've been making cars here since the 1970s. It's a mighty fall from grace for Peugeot and Citroën, France's leading car maker.
10, 20 years ago, there was work. There were 2 or 3 models of car. Today, we've only got 1 model and half the factory is empty.
In what's been a tough couple of years for the whole car industry, PSA's struggled in its target French and Southern European markets, burdened with the debt crisis. Competitor Renault has fared better, thanks in part to their low-cost Dacia brand and a merger with Japanese car maker Nissan. But for PSA, last 12 months have been bleak. Profits have nosedived down more than a third. Share price has halved. Peugeot and the French government have denied that a state-funded rescue could be on the cards. Instead, PSA hope an alliance with the world's biggest car maker, General Motors, will help boost flagging sales and save thousands of jobs.
So Peugeot's share price remaining heavily depressed going into that meeting very, very shortly. And it's shaping up to be a week to forget on the markets, isn't it?
And maybe a month to forget, Stuart. June was a great month for Asian markets. In fact, June was a pretty good month for most world markets. That is not proving to be the case. The Asian markets trading once again sharply down. You can see the Nikkei down now by around 1.5%. Just the Shanghai Composite up. Just to put that in context for you, where the Nikkei has lost almost as much as it put on in just 5 days of trading in July as it did throughout the whole of June. So not looking to be a great summer so far. Who knows what will happen.
Well, Spain's IBEX did at least finish positively, 1.2% gain, but it's Spanish voters who are paying the price for that relief on the markets with some severe cutbacks, aren't they?
If this is not a state bailout, then it certainly looks and feels like one, Stuart. Let's look at the numbers here for Spain. That austerity package, as you say, announced by Prime Minister Rajoy in Parliament in Spain on Wednesday. Those are the numbers for you. The top figure, 65 billion euros in spending cuts, as well as raised taxes. One of those taxes will be an increase in VAT from the current rate of 18% to 21%. If you're unemployed as well, you're probably going to see your benefits reduced substantially after 6 months out of work. And let's face it, that is really going to hit many of the unemployed. It's got the highest unemployment rate in Western Europe at 24%. Private investors won't be spared from this either. They will be forced to take haircuts or write-downs on their investments of a combined total of up to 67 billion euros. This is all in return, remember, for that bank bailout and recapitalisation of Spain's banks to the tune of up to 100 billion euros. Well, it was a particularly tough day for Prime Minister Rajoy, who came to office promising tax cuts and has now had to U-turn on that pledge.
I said I would cut taxes, but I'm raising them. I haven't changed my position. I will reduce taxes when it's possible, but circumstances have changed and I need to adapt to them.
Yeah, pretty humiliating moment there for Prime Minister Roy. Did the trick, though, for Spain's borrowing cost, didn't it?
Well, absolutely. And this was the crucial thing for the government, trying to give itself a little breathing room, trying desperately to bring down those borrowing costs, which have been shooting up to very dangerous levels in the past few weeks. For the past week or so, we've seen Spanish borrowing costs up to that danger point of 7%. Well, that announcement by the government brought borrowing costs down by 0.5%. Still very high, though, at 6.5%, but a little bit of relief for a country that's struggling to borrow right now.
OK, we're going to stay with the Eurozone crisis as we catch up with some more headlines for you. And Europe's most at-risk banks have increased their capital buffers well beyond the required amount. That's according to the European Banking Association. It says 27 at-risk banks have now combined top-quality assets known as Core Tier 1 capital of 97 billion euros. That's around 20 billion more than they were required to raise to stop future financial shocks.
The US government has been forced to U-turn on its harvest forecasts because of the drought triggered by the heat wave. Agriculture officials now think that farmers will produce 12% less corn than they originally thought. Corn prices have rocketed nearly a third in recent weeks, with soybeans also steeply up as the US endures a heat wave that is decimating crops.
And staying with the US, Barack Obama has given firms permission to resume investment in Burma following the country's liberalisation. The US president made his decree as an American ambassador, meant the regime's rulers the first such encounter for more than 20 years. American companies are now expected to join a rush to exploit large reserves of oil and gas in the South Asian state.
Now, if like me, you followed Euro 2012, you'll know that Spain's the place right now to watch the beautiful game at its most sublime. That team lifting that trophy in fine style back in Kiev. But when it comes to money, China is giving some of the world's wealthiest clubs a run for their money. Some of the least known clubs in the world are now drawing some of the game's biggest names. But at what cost to the future of football? Siobhan Silk has more.
Shanghai Shenhua are only playing a friendly, but the stands are packed and the media are out in force. Here's the big draw. Former French international Nicolas Anelka. He joined the side earlier this year, and he's not the only big name of world football to be plying his trade here. Shanghai also counts Colombian midfielder Giovanni Moreno in its squad and is managed by former Argentina boss Sergio Batista. They're soon to be joined by Ivorian superstar Didier Drogba. He can expect to earn a paycheck of $300,000 a month at Shanghai, one of many Chinese clubs funded by wealthy owners with deep pockets.
I think such a trend might probably last for 2 to 3 more years, because this involves a lot of financial support to keep it going. I feel such a situation cannot be sustainable in the long term.
But it's a trend that other clubs are following. The call of China is tempting for Western players, perhaps considered past their prime at home. Local footballers fear if clubs are blowing their budgets on foreign players, the domestic game could be hurt.
I feel more of the focus should be on developing young talents. A mature football club must emphasize the overall development of their football teams. They can't let their first team age without younger players to take over. But in China, perhaps it's quite difficult.
With Chinese clubs focused on recruiting foreign players, the national team is suffering from the lack of domestic talent. China is languishing in 68th position in the FIFA rankings, behind the likes of Haiti and Sierra Leone, and has failed to qualify for the 2014 World Cup.
Just to pick up on that last point, Stuart, you could almost have exactly the same story in a country like England right now, one of the richest league in the world, with some of the world's best played and most talented players. And yet many say that is stifling English talent from coming through, because many clubs prefer to employ foreign labour. It's cheaper, if you like, to buy a striker from abroad than to actually nurture one and pay them slightly less, at least when they're developing. It's not just China that's doing this as well. You've got countries like Russia employing the likes of Samuel Eto'o, one of the world's greatest players, who took off there, took the big money and went. Roberto Carlos from Brazil as well followed suit. So it's not just China, but it is creating these imbalances, if you like, in the football market, where clubs like China, or the Chinese club that we've just seen, can pay what it seems huge wages to get this kind of talent.
So is there any way they're going to be able to kind of reduce these spending imbalances?
Well, it's ironic, isn't it, that just in the last 12 months, or this season at least, new rules drawn up by UEFA, fair play rules, will actually limit clubs spending. What UEFA are trying to do is to stop this exact situation, the Chelseas, the Manchester Uniteds of this world, paying what it seems is unlimited sums of money to snap up the best talent. Clubs won't be allowed essentially to spend more than they get, and that should dampen down this this rampant market a little bit. The problem is countries like China obviously aren't subjected to UEFA rules. This is a European ruling, and countries, of course, like Russia aren't quite subject to the same rules as well. So until you see some sort of global regulation in the football marketplace, you're likely to see that situation in China continue.
New job for you, Owen, our sports editor, Owen Fairclough there on France 24. He might be out with the business or perhaps the sport a little bit later on, who knows. Don't forget, as ever, here on France 24, you can have a look at our website, www.france24.com. On there you'll find all the latest news headlines, plus, of course, all the various programmes which we show on the channel as well, obviously leading there with the defection of the Syrian ambassador to Iran. That's the news from us. More news coming up after the break. Do stay with us if you can.